Justin Pulitzer. This is my midweek video for Thursday, July 6, 2023. I'm filming it on Wednesday the 5th. It's 10:24 p.m. Obviously, the midweek video is a little later in the week this week. We didn't have a Fed event, but we did have a odd week with July 4th. Monday was the 1 p.m. close. Tuesday, the market was closed, and then today was our first full day, so I'm sort of backtracking a little bit here to find enough content to discuss, but I do think there is actually enough, oddly, even with the day and a half. So we'll get into it. First and foremost, sentiment came in this week a little bit steamy, 60%, although it was a low response rate, probably because of the summer doldrums and the holidays, although I think some of the algorithmic tweaking they've been doing in Twitter lately has been throttling my account once again, so if you can like and retweet posts, particularly midweek and weekend videos, that would be very, very helpful. Polls as well. CNN, they're pretty excited too. They're actually higher than the prior close, and up from a week ago into the 80s. I guess, people are excited. The market's been pretty strong. And I'll tell you, for the most part, price action has been pretty decent. We've seen some pretty good action in stuff that's gone down, like FedEx, UNH, although not so much in Nike. But we'll get to those, don't worry. As far as the day today, we had the FOMC minutes, obviously a little bit hawkish. I'm sort of getting into the camp where that the Fed may go to 6%. That's sort of the way things might be looking if the Fed does continue their hawkishness, if the market continues to cooperate with them, and if GDP continues to cooperate with them, although the revision up to 1.4, given the fact that the inflation is much higher than that. I mean, we are already in de facto recession. We have propagandist media who won't admit it, but that really is the case. So, yeah, unemployment has been tame, and by the way, we're going to get a read on that on Friday, but that doesn't mean we can't freak out about it on Thursday for fun, because we get the JOLTS numbers. So if the job openings are big, people are going to infer that the employment situation is high and will likely have more Fed rate hikes. We have PMI, composite, ISM. Keep an eye on these. These could be somewhat market moving. They're not exactly, red star events, but they are ones to pay attention to. And of course, we have the AAPL number. I have to tell you, the difference between the ADP and the jobs number, they're sometimes just like polar opposites. You'd think they'd kind of be the same, but they're not. So a lot of people like to read into the tea leaves of the ADP and the employment. Not really so much the case. As far as the Fed goes, market believes they're one and done. If you go out to December, they're sort of maybe pricing in one more rate hike. I'm still of the opinion it's possible. The interest rates are coming up. I mean, the 2 years back up close to 5%. The bond king of Billyburg over here was back in there buying 26 and 13-week treasuries again. I seem to be doing that quite frequently. And 10-year getting close to 4% again. That's been, where things start becoming problems for the market. We'll see if it is again. I know a lot of people are very excited on Twitter saying, interest rates are going higher and the market's not really going lower. But funny thing with momentum, all it does is have to stop going higher and then there could be a liquidation break. So do keep that in mind. I've maintained for a while I like booking profits into pops. I like raising stops. I like putting on hedges with the low VIX. We've talked about buying puts out in September, October, when crashes tend to happen and just seasonally weak in the market. And I like just, being careful here. I think the easy money has been made in a lot of stuff. There's still stuff that I think can go higher, and we'll obviously cover that. But on the by and large, things are not as cheap as they were just a few months ago. So, yeah. VIX up a bit. Couldn't really hold the bid, though. I mean, it closed kind of near the low of the day, although it is over the 20 MA, but that's sort of like, I was going to make a little bit of an off-color joke, but I'll just say this. When the hurdles are, for shorter people, they're easier to jump. Was that a nice way of saying it? We're still below the 50 MA. We could get all the way up into the 17s and this sort of just be, just a little bit of a bounce. But that being said, falling wedges do usually lead to higher volatility, but we haven't seen it manifest just yet. So TLT, a funny thing happened today. It was down quite a bit. I'm actually very glad it was, because on this day when I wanted to cover more of my one-to-one, I didn't really have the opportunity. And then the next day it was up a lot, and I was sort of like, gee whiz, all right, what am I going to do here? Are these going to go out worthless? Or, I mean, they're out a few months, but I was sort of like, am I going to have to wait for another round? And here we are, we got it again. And today I used the opportunity to close some of the one-to-one. So I'm naked short 95 puts, I believe in September OPEX. But if we rally again, I'll put on the, the 1x2 once more, do the time warp again. And I've done this trade multiple times this year. It has worked like a charm. I covered a little earlier this time, just because we had, a higher low here, and I still have some, I think, of the original play on. I have to check, but I did cover a lot of it. And yeah, I mean, TLT really starts dropping more, I'm not going to be so thrilled, but, if it gets down to 95, I'm, kind of cool owning it down there. I think that there will be, some good support. That's the 78.6, I mean, of the entire frickin' range. So, yeah, that should do it. XLF, interesting. By the way, when I pick strikes, they're not by mistake. they're well thought out. XLF. So, a funny thing happened on Friday after the close. The banks, all the big ones, came out and they raised their dividends. I mean, talk about flaunting a red cape in front of the Fed. And yeah, they did it, but they didn't make a higher high, and technically it's a little bit of a stretch here, granted. But we may have a secure high here at the 50-day moving average. I wouldn't hang my hat on that, given the fact that we're above the 200 MA and we've held the gap, but I would tell you this: if we lose 33.60, I think you got a quick short there into 33.19-ish. So keep an eye on this. This has to hold. I think it's actionable over Wednesday's high, over 33.92. So I'm going to put an alert here, 33.93. And I'm going to say, just simple, row long. Why do I like this setup, by the way? Well, I'll give you a minute to think about it while I put in the row short, because the answer is probably obvious to many of you, but maybe not to all. First of all, number one, we're at the 50-day, the 200 MA moving average and the 50% fib. Number two, we have this is really the reason. We have a very narrow range here, and it wouldn't really be a big stretch to be long and use either the close or really below the 50% fib or even the low of day as a stop if this triggers. And where would we be targeting? The 61.8, because we go from MA to MA and fib to fib. And the big fib where this broke down from was 34.53, which is of course the 61.8. I had that in a little bit of reverse order. Now, if we lose the low of day, same thing. You could either use the 50% fib or the high of day as a stop and target the gap fill, and then probably a little sum down here to the 100 MA and 20 MA. So I like the risk reward given the narrow range and the fact that we have multiple points of technicals right here with the potential secure high triggering the downside or the negation of the secure high for the move back up to the 61.8. Pretty simple setup there, but I do like that. Dixie is $1. I told you I was starting to not feel comfortable again. We had talked about that down here with the short, and it's back up really to some kind of key levels. This is where it broke down from the last time, of course, 103.448. Next big level up, I guess, 103.964, but the real biggie would be 104.636 to 105, and I'll tell you, another test back up to there off of a higher low is going to get a lot of people, including myself, wondering if we had kind of a W bottom here, or a cup and handle, or whatever the F you want to call it, and the potential for this to really start taking off. And if that does happen, then I think you get your correction, because the dollar has been very accommodative for the bulls and multinational corporations and so on and so forth. Bitcoin, a bit of a slap down today, but it's still on the 10 MA, so it's hard to get too bearish. But, Bitcoin has been a leader, not something to, I guess, thumb your nose at. And we are kind of getting close to a pretty big resistance level, enough so that I thought to put in a red box. So anything between 32,480 and 34,295, and maybe an overshoot to the 2 times range of 35,420 would be areas to sell into. I don't really get too bearish on this unless we really get back below 29,910 and hold. If we do, then I think the crypto bounce has got some issues. Gold. I keep hearing it advertised again, like a lot advertised. And I was hearing that up near the highs. I was hearing it down near the lows. It's sort of just, they're still doing it. I mean, it's been years. So, I don't know. William Devane, he used to be great on Knots Landing as Greg Sumner in the 80s. Was, used to do those commercials, but we're below the 20 MA, we're below 180.09. Until we clear there, it's tough. It's tough because you know me and 20 MAs. I like to be long things above 20 MAs, and I like to kind of be short things below 20 MAs. So if you're short, the 20 MA is your stop. Oil did see a bit of a bounce. Oil stocks didn't, though. That was something to note. And if you noticed, we had a little note in here about Musk clearing the 50 MA. Well, we did it here. So if you want to be long, 71.40 is a good stop. If we get below there, no bueno. Next stop here would be 74.23, and who knows? Maybe we get back up to 76.98. I had told you for a while that I thought that this was a strangle play, and it's just playing out that way. The problem we have is we got low volatility. And, it's tough to play things when you have low volatility when you're short premium. And that would be what a strangler or an iron condor would be. So XLE, interesting. It's not really doing much, but we do have a bit of a trend break, and we did hold the backside of the trend. So there is that, and we are above the 50 and 20-day moving average. It's never heartening, I would say, or whatever terminology you want to use, when oil's up for the energy stocks not to be. But they had been up a lot, and I'll keep it simple. If you want to be long these, 79.58 to 80.14 to 79, 80.14. Why am I seeing, I don't know what this is. Oh, wow, all right, so disregard. 80.14, as long as that holds, or if you just want to use 80, that's fine. That's cool. Below there is probably a little bit too much of a pullback, and you want to stop out. If you've ridden this up, you wouldn't want to give back much more. As a lot of people were talking about this retail today, and I was sort of scratching my head wondering what they were getting all excited about. It's just the first couple of days of a bounce, and we've seen this before, but it's still in a triangular wedge. I don't really see that much here. Could it go higher? I guess. So pretty simple. If you get over 74.75, because we have a dubstep setup here, I guess you could be long. If you want to be a little bit quicker, 74.69, I'm cool with that too. We filled the gap and got a little pullback. Have a higher low now, but anything below 74.69, I'm sorry to say, is a short. And you would use either the close of 74.62 or 74.69, the high of day, as a stop. So below here, short, because the higher low failed. The dubstep is basically in real true technical parlance, not effing around here, it's an inside harami. And the way I view it is it's a higher low after a big candle. And if you lose the higher low, you're going to go lower. But if you get over the 2-day high, it goes higher. It's pretty simple, and pattern repeats and seems to work over and over and over again. So we'll keep doing it. Does it fail sometimes? Yeah, it has. Has it beaten me on that before? Yeah. Has it beaten me more than I've made on it? No, not even close. All right, so let's talk about ES and NQ before we get into the SPY and all that fun stuff. So a few things to note here. Number one, we're banging up against some resistance in multiple time frames here. We had this 2 times range, we had the big 2 times, and the past 100% retracement. And we have a few more fibs to contend with on the upside. I had tweeted out pretty early, and I said anything below this 44.94, 75, I guess, would be kind of sideways to lower, chop. And that's exactly what happened. If we can clear there and we could clear 44.98, then I guess we're going up to 45.10, 45.11, I guess, because we don't use 91. If you want to use 75, that's fine. And then maybe 45.30. And I'll tell you this, though. Anything that is below this 44.94.75 does risk a liquidation break down to 44.39.5, which is, of course, the Fed day high and the breakout. So just saying. NQ, very similar, but a little bit different. We didn't get back up to the recent high at 15,475 half like we did up here in the ES, so that is lagging a little bit. We are able to hold the 200 MA 15-minute, and as long as we can do that, it is okay, but it isn't amazing. But again, we did run into a confluence of some fib extensions, 15,425 and 15,456, but we stalled at the 425. And I'll keep it simple. Anything that is below these kind of interim highs here of 15,376.75 to 15,392 risks a liquidation break, number one, back to the prior overnight low at 15,255 quarter, and more importantly, the Fed day high at 15,216. And then we're really deciding, because if that fails, we're looking at 15,139 quarter, and then, maybe a run even at 15,000. By the way, in the ES, 44.39 half, and then 44.24.75, and then it's 43.99.75. Not really prepared to discuss levels after that, although it would be 43.83 half. So just take down some levels that we just mentioned and trade accordingly. SPY. One of my favorite instruments. We talk about it quite a bit. I often joke around and I say I'm a SPY kind of guy. I'll tell you, even if we got to pull back to the 20 MA down here to 435.61, it really wouldn't be the end of the world. I would just basically say we have a potential double top, but we've discussed in prior videos you need to lose 431.18. Why 40.31.18, you might ask? Well, if you've watched prior videos, you already know the answer, but if you haven't, you're new, and there are some of you. It's very simple. It's a fulcrum pivot. What is the fulcrum pivot, you might ask? These are highly technical terms, JP. Don't confuse us. Well, it's pretty simple. When you have two highs and you have a low in between there, like this is known as a fulcrum pivot. And when those are lost, not all the time, I will say this, it doesn't always mean the end of the run. I will say this, though, whenever they are lost, it usually means lower before higher, at the very least, but it often can mean the end of the rally. And when I mean the end of the rally, I mean the end of the rally. So just keep that in mind. If that would be lost, I think you could start opening up some shorts, because people will be talking about double tops, and it would not be a good thing. Isn't that the Martha Stewart saying? Not a good thing. Not a good thing. Speaking of OPEX for this week, I just pulled up the SPY max pain. I was like, let's take a look at that max pain. Roll that beautiful bean footage. And one interesting thing to note is 438 is the expected move, which is actually the gap fill. So maybe people are playing that for the potential on a bad jobs number, and maybe the 20 MA will catch up by then. We'll see. All right, there's some potential downside there. So I'd say 438 to 435.61, and if we really the pooch, I totally potty mouthing it tonight. That 431.73 to 429.61. which is the yellow channel low in the backside of the old green channel, could be in play. Now, on the upside, very simple. If we get over the 615 reference high here at 443.90, well, then I think we're going up to 450.01 to 451.76, which is the 78.6 of the range, oddly enough. So pretty much my thinking is, as long as we're above the 61.8, and if we can clear this reference high, then we're going to the 78.6, fib to fib, level to level. Yeah, it's really that simple. Not really trying to reinvent the wheel here. Expected move, by the way, is only $3.48. So my worry, though, is, you know, with a low VIX, the potential for a larger downsize asymmetric move versus a larger upside one is kind of there, and money flow is still kind of rolling over here. So kind of keep that in mind. DIA, expected move $2.37. So, what's up with the DIA? Well, number one, the money flow is still coming out. And we do have a potential now lower high and a teetering on a failed breakout here above the 342.59 reference high from back on 5/1. We contended with it on 6/13. We got through it here on 6/15. We pulled back to it. And then once that failed, we went lower. This is sort of like what would happen with a fulcrum pivot. You might go lower before higher. But we gapped up and we held, and we're kind of testing a little bit below there, but held. I'm going to put an alert over the high of day, 343.74. Why am I doing that? Come on, you know. If I were short and this got taken out, I would be wetting my pants. I'm just telling you, I would be like, whoa. Particularly if it happens in some kind of gap. Oh boy, that would be some uppage to maybe up to 348. So very simple. If we lose the low of day, I think we're filling in the gap here, obviously to 341.16 and probably getting to at least the 20 MA at 340.33. But are we now in a new channel, a down channel, you know, with maybe a pretty wide one? I don't know. I'm just speculating, and I drew it in just to kind of show you guys, because the 50% fib and the 336.18 could, you know, be a lower strike if you're doing some kind of a put spread. So very simple. We've got to hold above that 342.59. If we do get up above the Wednesday high here, I'll try it long. And if we can't, then you could just be flat or short. Pretty simple. FedEx, I had mentioned it earlier, so I'll discuss it again. UPS may be getting a Teamsters union strike, so that would maybe benefit FedEx. Maybe that's why people bought the dip, because, you know, people always know things. Some of them think they're smarter than they are often, but some people actually do know. And usually the ones who do know don't say, but they do. You know, they act. Upside in the channel here could take you up to 261s. That would be something, but we are kind of mid to the higher part of the channel, and I'd be a little careful if we start losing 245.65. And I'd be fully out if we started losing 242.42. Okay, that's 10 MA, and that was another key range low from back in the day, and also an area we kind of struggled with. So, yeah, just looks like it's flagging out here, but be a little careful. Good price action. Bad news with good price action always incentivizes me and excites me to buy things. We had talked about buying UNH as a look below and fail, but we never fully got the gap fill. And we had talked about booking some at 481.60 and stopping out below the 10 MA. So today would have been that stop out. Unfortunately, sometimes you can't get the whole thing. It just doesn't always work that way. Just saying. Discipline. What is it? Discipline trumps conviction. Whoever says that is, I guess right. Nike, below 20 MA, not good. Potential breakdown. I think if you want to be long Nike, over 108.91 would make sense for maybe a move back up to 112s. But this quote-unquote should really get back down to like 102s. And I would be a buyer down here, and I'm going to put an alert at 92.21. No, sorry, 92.10. I thought it was 21 for some reason. And last at or below, I'll say row long at gap fill. Now, what I think I'm going to do, because I closed a bunch of trades the last few days, I'm going to not like I need to put any more on. Believe me. I'm going to do a ratio play with like 92. Let me see if we could do. I doubt we're going to be able to do this, but let's see. If we went out to, I don't like going out to August, but with a low VIX, you got to work with me a little. I mean, if there are no 92s here, so that's a bit of a problem. This isn't my office. For those of you who are like deep cut JP fans, you know exactly what that was referencing. Of course, the immortal character of Jeffrey from Beverly Hills Cop 2. This isn't my office. Paul Reiser, by the way. I guess if you want to do, for me, I've always been of the opinion, don't sell cheap options. And do I really want to sell 95 puts in Nike for under 50 cents with 44 days to go? No. So September, not much better. See, this is the problem. When the VIX is this cheap, you got to go out to like October to even get something remotely interesting. So 97.5, 90, it's not even $10 wide, and I'm 107 days out. Yeah, these are the problems. So yeah, I'll just wait for lower, I guess, or a higher VIX. I can't even do a frickin' ratio play. Piece of crap. But if you want to do a, want to do just a 1-by-1, that's fine. But can't get it on for free. Disney's got to get over the 20 MA. I covered some of the short, and I think I have some puts short, actually. They're a little longer dated. I think they're in September. I may just take them off. I'm up in them, and I don't really love Disney. I think, I don't know how I have to check how Indiana Jones did, but I think it actually lost to Sound of Freedom, which is kind of heartening. Good. I've been dying to see that, by the way. Both movies, by the way. But be careful below the 10 MA. That's, what is that now? 89.03. That would not be a good thing. Let's take a look at IWM. Moving right along. It's got to hold the 20 MA here. If not, and we do have a little bit of a lower high, it got close to some resistance. And it's pulling back, so 20 MA kind of has to hold. If not, maybe short. Maybe we could get all the way down to who knows, back down to this kind of stacking of MAs between 179 and 180. That would be a great area to buy the dip, by the way, because you have the stacking of these moving averages and the channel low within 2 points of each other. So up here, this was a resistance level. I'll tell you, if you want to be short, 187.11 is the 61.8. I wouldn't let it get back up over there. If you want to use 186.64, that's fine, but 61.8 looks like the number to me. $2.15 is the expected move. DO is only $2.37. It's just like this is kind of a quiet week, Although with the jobs report coming up, we'll see. We'll see if the market just ignores it. I always get a little worried when people aren't worried, When everyone's all worried about the jobs report, like, oh my God, I'm usually not that worried because I know VIX is going to contract. But when VIX is low, it just, it doesn't mean it won't, but it doesn't mean that it will. All right, so we're into some JP resistance levels here. The 329.22 reference highs close to the 78.6 at 375.66. The expected move here is $4.14. I'll go out on a limb and say don't let it get below 368.66, the low of day from today on you. If it does, I think we fill in the gap here. It's a small one down to 363.81 and probably test back to the 20 MA at 362.83. Is that really significant technically? No. Would it be that big of a deal? No. Would I get more nervous if we lose 357.50? Yeah. That, or 58 I have below here. Let me get rid of this because this is a little confusing. This is the fulcrum pivot, so I'd be a little bit more worried about that. But, little gap fill, little pullback wouldn't be that terrible. But we are bumping into some resistance, and I do like trimming some profits into some up moves. And we are starting to see some things showing a little bit of signs, like SMH today. Potential lower high, even Apple wasn't beast mode. So we do have a little bit of a pennant forming here. Ooh, drama. So very simple. We have a little channel within a bigger channel. So it's still, bullish trend. But we're teetering on the 20 MA and 10 MA. And the channel low, if we got there tomorrow, would be 148.86. So maybe we wait for the pennant to break. A move up could be an up move. A move down could, you know, take us a little lower, maybe back down to 142s. So, yeah, just stay frosty. NVIDIA. Still above that 419.38 area, still above the 20 MA. If it loses the 20 MA, try short. If it holds the 20 MA, it's still, you know, long or flat. 412.91. Wasn't gonna do a AVGO, but why not? Trying to break trend, pulling back here. I'll keep it simple. Also, look, the money flow is making lower highs here. If I were long this, I would just be out of it, but I wouldn't be short it really until we lose the 20 MA at 845.11, because that's been the key support. So wait for that to break. Tesla. So we're getting kind of close to the down channel up here at 293s. Maybe they make a move for 300. Just kind of one time framing here to the upside. So what would I, after the gap, so what would I do? Well, low of day is 277.60. That would end the one time framing, wouldn't it? You are riding channel high, so that to me is a good stop. Money flow is not really confirming new highs here. I think a lot of this stuff is just kind of getting pushed up, you know, because we're in a thin market, and bulls are kind of taking advantage of that. You know, never short a dull market is the old saying. So maybe a little bit more, but that would be kind of the more I'd be booking into. RIVN, I had been long. I talked about this. I almost like had to hold my nose buying this thing, but it did work out. And boom, boom, very nice. 200 MA was a sell, and the stock promptly pulled back. I actually thought it could have a little bit of an overshoot to 2168. Don't worry, now that I'm mostly out of it, it will continue going higher. But look, I'm a trader first and foremost. I saw this hit. I saw the pullback. I actually wasn't fast enough to get out of it, and I waited for the rally into the close, which I was sort of sweating a little bit into because I didn't know that it was going to close. At some points during the day, this really looked like it could break down, and I was sort of discussing with some people. That's weird. Oh, because it's the 5 minute. I need the 15 minute, you freak. All right. I had discussed maybe buying or reloading or adding at the 100 MA. We never got there. Why did I pick that number? Well, I'll show you, because that's where it bounced hard from here. My chart isn't going back further for some reason. I already know why. It's because we're in 1 day. We need, let's just do 5 days. You could see it's up a lot. This was the big support. It was, I thought it was again. These charts kind of have a funny look to them. But this to me looked a little head and shoulders-ish. It looked like it was kind of rallying back here, and I had my orders out. I didn't quite get filled. It pulled back, and I was sort of just like about to cut bait, but with the next candle really kind of took it back. Like if this hammer was violated, I was gone on the existing, and then maybe I'd have reloaded, you know, almost a point lower at the 100 MA. But we rallied into the close, and I used that to kind of skedaddle. Yeah, the anatomy. Sometime, one day I'll do some recordings of some of this live, you know, I should do some live trading stuff. I think you guys might benefit from it. Look where we stalled, by the way, with Apple, above the channel, but let's not get ahead of our skis here. So first and foremost, we did stall at the channel high, and we are one time framing now to the downside. If Apple pulled back just to the 20 MA, it really wouldn't be the end of the world. But that being said, the 10 MA has been what's holding it. So that's going to be the key. If it can hold the 10 MA, it's still to the upside, 188.76. If it loses that, I do think we come back down to 184.95 to 185.66. So often these little small gaps fill, so it wouldn't surprise me if we get down there and then it bounces. Apple's still pretty strong, but we have seen this where it rallies and kind of goes sideways, pulls back, only to continue rallying. You know, if it does pull back and we get down to the support, maybe put on the, you know, the call spread for the move to 200, you know, out in September. Microsoft. This is a stock that did have a look above and fail of the old high, but it hasn't really cracked too much. It just looks like chop to me. If this would also be a strangle play for me, or an iron condor, because I think the upside could be capped, but I think the downside could be capped also. 313.85 is a gap fill. The 50 MA is like lined up perfectly with the yellow channel. So I think the 50 MA would be a right or right out buy. And if we do lose the 20 MA at 335.01, there could be a right or right out short, or a same week 1/2 put ratio for that play if it can get on for 0, of course, or a small net credit. Or if you want to, just play hedge yourself, that could be a nice little hedge. Buy 20 MA, sell 50 MA, sell 100 MA. I like that. Meta. So we've been bullish on the Meta. I think they've had some pretty good ads for their new what is it, Threads. I just signed up. Don't worry, I'm staying on Twitter. I'm already a little disillusioned with Threads, but it's got to hold 289.01. If it can, then I think we go up to 323. Below 289.01, maybe stop out of some, and if we get below 285.5, which is the 10 MA, I'd stop out of the whole thing. I don't know if I'd get short until we lose the 20 MA, because that's been very key for everything, but below the 10 MA, maybe I'd try. 20 MA for sure, and play for the 50 MA. So I'll tell you, if you want to put on a hedge, maybe buy 280, sell 250 or 248 puts. That could be a nice little hedge, and then maybe sell some upside calls at 320 or so. That's one way to play it. Also, by the way, if you're long shares and you want to play some share enhancement, like let's just say you're long 100 shares, buy a 300 call, sell 2 times of whatever higher strike pays for the 1. You're levered now, and you're covered because you have the 1/1 covered by the shares and the 1, and you have the bought call that's paid for by the 2 times short of the higher call. And yeah, it's called share enhancement or share repair. This is still holding up really well in Amazon, but the money flow continues to bend. So, that can only happen for so long. And, we keep seeing these kind of topping tails up here. It's run a lot. It's still above the 20 MA. There's maybe a little bit more room up to 135 to 136.45, but that's probably the pop you might want to sell into. I'd love for this to pull back ahead of Prime Day, but I don't know. Maybe we run into Prime Day, because the Prime Day is coming up. I think it's the 11th and 12th. So maybe be long into Prime Day, but not for actual Prime Day, because if the results are weak, that could trigger the pullback. TWLO. This thing had been born again hard, and now it's just down. So my thinking here, it just kind of looks a little sloppy, to be frank. I mean, it's not really one I trade very often. I'd honestly have to go back into my logs to see if the last time I've even ever traded this. It maybe not even ever. I feel like I did, but it's been so long ago. I don't even remember. So it's still kind of in a bit of a downtrend, and I'll tell you, if you want to be long, I don't let it get below the 100 MA on you, 61.51. That's kind of the channel low and near the 50% fib. So 61s kind of has to hold, 61.35 to 61.24, 61.51. Like this here, let me just draw this zone in. This kind of little block needs to hold. If it doesn't, it could hit the 50 MA. It could get down, to test the breakout down here, closer to 55s to 56s. But, it just looks like sideways chop to me. I don't really see a lot down here. If you want to buy some of this and just stick it away for a few years, you'll probably be all right, but not looking so amazing here. Google. I was wanting this to go lower. You bastard. I had the 1x2s on and all that, but we did talk about, buying the dip right or right out at the backside of the old channel and the 50 MA confluence, but the bad news is the 20 MA was the target, and we're here. So don't let it get below 121.24 on you. And if it does break the 50 MA now, it's a short. So this was where it broke down from. I had sold out of this much higher, like in the 125s. It did go higher, much to my chagrin by a few points, but that's okay. And it's still lower than where I sold it, and you know, I'm kind of looking to get back in, but nothing more than trading at this opportunity, you know, 50 MA to 20 MA kind of stuff. Netflix, Goldman Sachs threw in the towel here, and they're now saying it's going to get to 500. That really freaks me the F out, because I've been saying I think it gets up to the 500s also. So I don't like when Goldman is on my team. I like when they're not, actually. So stock probably goes a little bit higher on that, but look, as long as it holds like 431.85 and I guess the 20 MA on pullbacks, it's all right. But yeah, we're getting kind of close, and I don't like when companies like Goldman throw in the towel. Money flow isn't confirming, but it could go a bit higher. So keep that in mind. Yeah, wow. PANW still strong, man. Wow, I'm just like, I'm floored by this stock. Every time I look at it, it's like into targets. The next big one is up here around 271.77. Don't let it get below 253.83 on you now, though. That was a big big one for me. So I mean, the next big ones really are 271.77 and 307.69. Could it do it? I mean, it wouldn't surprise me. It's way overbought. It's being pushed up on momentum. I would probably try short below the 10 MA, 250, but not unless it really broke there. It's a beast. It's a beast. Square. I'm long PayPal, and I'm up nicely on it. It held the 20 MA. It kind of busted out here. It's into the so look, if you're long some, I'd probably trim a little here, but the next big target up here is the 50% fib at 72.51 and the gap fill at 72.65. Could it even get up to 76.63 on some kind of momentum push? Would not surprise me. But this area 67.61 to 68.39 kind of has to hold. So if it holds the 38.2, it gets the 50%. If it loses the 38.2, you know, it could just kind of languish for a bit. But it does look like it's improving. I think they have a credit card or something out. Everyone was like excited about. Yeah, right. So PayPal. It tested me. It almost, but it didn't violate the 20 MA. It's now above the 50 MA. It's above trend. And it's into actually some areas to trim into. I've been kind of trying to play for 75.52, the full gap fill. And if I'm really being honest, in my heart of hearts, I do think it will get back up to 100 at some point. It's going to take a while. It's going to take 2 back-to-back good quarters. And I'll tell you, if this keeps running, and I really hope it does ahead of earnings, I will not be long for the actual earnings. So if it's up into the 71s here, 71.22 is where this broke down from, and I have an alert set there. I also have, I don't need the 69.69 anymore. This will be likely where I sell, but if it does get it, because it would line up with the 100 MA where this broke down from and the bottom of the gap. The full gap fill is 75.70. Let me write this in here. This was an old gap fill, but this is really the bottom of the gap. Let me draw a note in here for myself because book it. Look, I'm probably going to at some point with this roll some of the profits into like longer dated call spreads and then just maybe sit on that. Although I do have honey of a location with the not quite the lows, but pretty low 6 handles on this. So yeah, that could be pretty good. CRM, let's end on CRM because why not? It's above the 20 MA. It's above trend a little bit here. You're into this too. It's just been kind of trading paint in this area. I mean, the big upside target here would be 228.21 to 229.43. And of course, the first one would be the triangle fill here up to 225. I'll keep it simple. What do I say? I like being things long above the 20 MA and maybe not below the 20 MA. So if it loses to 11.23, don't be long. If it's above there, it's fine. So that's that. Have a great rest of your week. Be mindful. We have not the Fed. We have the jobs number on Friday. And if that is a big disappointment, meaning, look, the whole thesis for the rally here is the recession being pushed out. So if there's any sign that the recession is nearer, that would not be a good thing. Okay, we'll leave it at that. Have a great rest of your week. I'll see you for the weekend video, late night Friday, early morning Saturday. Cheers. And it's 11:11. Wow.